The wife and I are 44 and 48. We are on step 3, and we have a total of $74,000 in student loans. Given our ages, should we simultaneously pay down the loans while building our emergency fund and Roth IRA?
Okay, so Bob, it's going to be difficult to answer this exact question, not knowing the other unique intricacies of your financial life. But fortunately, we recognize that a lot of people find themselves in a similar situation to you. Man, I've got these things going on. I've got these competing priorities, and I'm trying to think about where can my dollars be best utilized? What would be the best next use of my next dollar? That's why we came up with the financial order of operations. Brian, you hold the thing up. It's a 9-step, tried and true process about what you should think about doing with your next dollar. Where will your next dollar have the greatest value? Now, you say you're in step 3. Brian, step 3 is high interest debt. One of the questions I would have is Bob says that they have about $74,000 in student loans. I don't know what the interest rate on those student loans are. I don't know if that classifies as high interest debt inside of step 3 or if it might be low interest debt inside of step 9. So one of the things you have to figure out is, okay, where does that fall? And then once you figure that out, then you have to start to order your priorities. Okay, based on where I am and where I ultimately want to go, how can I allocate my dollars in a way to move towards the priorities and goals that are the greatest to me, whether that be financial independence or becoming debt-free, paying off the student loans. I think he has to layer his goals that way before he can decide exactly how to tackle them.
And I liked his name as more Bobby, because it's got the B. Bobby.
It was Bob B.
Oh, it was Bob. Okay.
Bobby.
I like Bobby.
So I like that. It kicks it up a level. But here's the way I would work through this triage, because I think you're exactly right. You have to figure out, is this low interest, high interest, so you can get out of step 3, move into emergency reserves, which is step 4, and then let's get into the fun, exciting stuff of like investing this money with Roth IRAs, 401ks, and so forth. So because 44 and 48, it's not old because it's younger than me. So anything that is younger than me can't be old. But it is definitely getting far enough on a wealth multiplier scale. You got to get serious about your financial independence journey. And we got to quickly triage to figure out, you behind the curve, on the curve, or ahead of the curve, because that's also going to have an influence on how that debt's paid down, because you got to hit it from multiple fronts here. And when we've tried to figure out, how do you tell people, are they ahead of the curve, behind the curve, or right where they need to be? The Know Your Number course is really where we are. It's learn.moneyguy.com. That way you can actually put in all of your variables. This is not, by the way, this is once again, it's not just to sell this product to get it. It's so you know where you are. You're like, why in the world are financial planners giving us these tools when they obviously are just running a financial planning firm and this is feeding clients to them? Yes, but we know that along the way, before you even need a financial planner, you're going to need something to take metrics. That's where the net worth tool comes in, because it gives you a dashboard annually to look at. But then you need to have something that spot checks you much broader than just looking at it on an annual basis. And that's where the Know Your Number, so you can actually take a measurement. And hopefully that's what I would use to kind of figure out the next phase of is where to focus the next dollar, is to use the Know Your Number in conjunction with the financial order of operations. And I think you'll be able to know where to go, Bobby.